Today's market call is presented by Robinhood. Robinhood's financial tools put you in control to trade, invest, and earn your way. 102 on the East Coast. Sorry, folks, that's me. But it is market call. Guy Adami, Dan Nathan, soon to be joined by the great Carter Worth. A lot going on. Dan, how are you?
I'm doing great, Guy Adami.
It is a fascinating day, and let's get right to the rundown because we want to sort of dissect a few things. Semi stocks, too hot to touch. That's Amanda Diaz. I mean, I just love it. How to protect your Tesla long. I think that is probably timely given the run that the stock has had. Runaway breakout stock, we're teasing that. And a little audience Q&A, Dan Nathan.
Yeah, so this is a day. We're going to do a bunch of trades here with options, and I think it's just the perfect opportunity to do that, Guy. We were talking last week about a VIX. Despite the markets being very near highs, that was trading around 20, which is much above the average over the last year or so, and that was kind of telling us a little something. Yeah, that being said, we got back down to like the mid-teens or so, so it might be providing an opportunity to kind of make some directional sort of plays, maybe hedging your book, hedging individual stocks. We're going to talk a little bit about that, but Guy, we got to talk about this rate situation here, because there's a lot of folks who are just basically saying inflation is not tamed, and a lot of the policy that we expect out of this next administration is maybe going to make it worse, right? And so the rate probabilities of future cuts, maybe it's coming down a little bit, but a lot of folks, and you were detailing this about a few weeks ago, a month ago, where some of the big whales in this market are on the same side of this as you are.
Yeah, and let's start with the slide that Doug Cass sent us. And again, Dougie helps us quite a bit, and we are indebted to him. But this is exactly right. I mean, equities continue to ignore the rising rates. And I think part of the reason the equity market is ignoring it, Dan, is because it's in the anticipation of, or on the back of, or some combination of a stronger economy. And participants are saying, you know what, rates are going higher for the right reasons. And that may be part of it. I don't think that's the entirety of it. And I don't think that's the majority of it. And at least for today, I think the broader equity market might be taking its cues from exactly this. But these are pretty significant rises in yields. And if you look at, you look at this note that Dougie sent us, you can go through it yourself. But real quick, if Amanda just wants to throw up a TLT chart just to show you where we've been and where we are now, we had that little bounce in the TLT. Yields came down in the 10-year, got to about, I think, 431 or so. But here we are basically selling off yet again. And I think it's concerning, and I'll stick to my guns. I think there's a good chance we go back and see the levels that we saw in May. And if you want to sort of extend this out even longer, Amanda, I think there's a really good chance that we get down to sort of that 82.5 level that we saw last fall. And, if you want to draw that horizontal line across that bottom, that's where I think we're inevitably headed, Dan Nathan.
Yeah, so it's interesting, Guy. Prior to the election, we are in this rate cutting cycle. Supposedly, we started out with a big jumbo 50 basis points. We had that one right after the election of 25, and now a lot of folks are saying, hey, listen, this might not go the way a lot of folks think it was. That was powering a lot of the move in equities, and now we have a situation where the Trump administration, there's all this talk, and you saw it at the Fed meeting the other day. I mean, Fed Chair Powell was asked the question directly whether he thought that he could get fired or would he leave if he got fired. And, one of the reasons why he wants to do that, he wants to put somebody in place to keep rates really low. When you think about the potential tax cuts, you think about the deficit spending, you think about rates being forced lower. I also think this is a big one, Guy. The lack of credibility we would have from the Federal Reserve if the president could push it around, for political reasons. I think that would be the sort of thing that would cause rates to go higher. And at some point, to Doug's, slide there, equities have to pay attention at some point.
I think that Jerome Powell learned a lesson in the fall of 2018, and we've talked about this a number of times. Remember, he was not in office all that long, and I think he was right back then to think about raising rates, and the market obviously did not like it. This S&P went down almost 20% over the course of 3 months, and obviously the President Trump at the time was not all that pleased with it. And I've said it a number of times. I really think that Jerome Powell got browbeaten into lowering rates. Now, you can't prove that, obviously, and you can't go back in time. But I think he learned his lesson then. And if you listen to him now, there's a resolve to him that says, you know what, this is an independent entity, which it should be, I think, to your point, and we're going to do what's right in terms of the data that we're seeing. And if that means we're not going to lower rates at the rate that the market is anticipating, so be it. And I think he's dug in. And I think actually that's another reason why I think yields are probably going higher here, because of the resolve that he's seemingly putting forth now. So I think there is, he said legally, there's no way for him to be let go. That's not entirely true. A Fed governor, which the Fed chair is included as part of, can be fired for cause by the president. But of course, I don't know what cause is. I don't think people really understand that. I think cause would be something outside of the norms that we're talking about right here.
Yeah, so let's go to the SPY chart here and see if the market, the equity market, is paying attention to this guy. So we had that kind of reversal, V reversal, if you will, the huge gap after the election last Wednesday. And if you just look at some of the levels, and maybe Amanda can give me the chart so I can kind of run this thing a little bit. I mean, that gap opening, if you look at it, and I'm just going to use my kind of horizontal cursor right here, you know, it was basically at those prior highs. It kept on running. We had 3 consecutive days of just kind of moving higher. Here we are yesterday. It was, you know, a little bit of a just consolidation thing, and we have a strong move to the downside here. If we were to get back to that sort of breakout level at 586, guy, you can do the math there. I mean, it's not a whole heck of a lot. It's about 2.5% or so, right? And so when you think about how much we gained, you know, off of that kind of 569-ish level up to about 600, I mean, that would make some sense. I'm just hard pressed to think, without any major piece of news, how this whole rally falls apart, unless, to what we just discussed, rates shoot much higher in the near term.
Yeah, I think that's exactly right. I mean, today at least, that's the driver, I think, of this entire thing. And I will say, I mean, it appears to me that's a bit of a foregone conclusion that we fill that gap that was created a week or so ago on the back of the election. It's really, the question is, how do we fill that gap? Do we do it by creating another gap to the downside and create a bit of an island, or is it more sort of a straight line down? So we'll see. But, you know, that uptrend line that you're in the midst of drawing, I mean, that effectively with time decay will get you to the filling of that gap. And then the question is, what happens from there? You know, the 150-day moving average in play. And as all the good news has sort of been baked in, I mean, you think about the rise that the equity markets were having into the election and the subsequent potential for a blow off top that we saw. I mean, I think people have to take notice. The one thing I will mention here, Dan, is the fact that on this day, as I mentioned earlier, the VIX is actually unchanged to slightly lower, which I think should give some, I don't know, hope to the optimists, but we'll see how the day sort of shakes out.
Yeah, so this was one that you and I thought was a bit curious when we were talking about it yesterday. The NASDAQ 100, so this is a QQQ, right? The ETF that tracks it. I mean, it definitely had the sort of move that the S&P had, but it really kind of lost its mojo just a few trading days ago. A big part of that, right? We've seen this rotation out of semis, which have been a huge leader relative to semis or software, and they just kind of broke out. And then it's the Mag 7. Maybe Amanda can, well, let me just go here to my main page here. And you can see a bunch of these names here. They kind of lost a little bit of their mojo also. And so a lot of sideways action there. And there's, listen, lots of thoughts, lots of theories about the regulatory environment and, you know, what's going to happen under the new regime and whether they come after these folks, which they started bringing some of these suits in the Trump administration, the prior one, right? And obviously under the Biden administration, Lena Khan would hog shit wild, you know, going after these folks. And, you know, who knows how this is going to shake out. One thing I just want to make on the regulatory front, guy, remember Trump was threatening to ban TikTok. This is maybe back in 1819 or something like that. And then he kind of did an about face on that. And then, you know, the Biden administration was kind of pushing for it. And then he, as a candidate in this last campaign, kind of did an about face again. And so it's interesting that a lot of folks are focusing on that now. You know, Snap is trading lower. So the idea that he might halt a potential ban. So we don't know. One thing we do know from the prior administration, or the last time he was there, he likes to pick winners and losers, right? And that has the ability to move stocks around in the market. And who knows whether he's going to follow through or not. But investors hate uncertainty, and they're likely to kind of sell first, ask questions later.
Well, the one you have to sort of look at is obviously Facebook, because I think, you know, although Facebook has sort of vacillated a little bit here, I think if there's any one company that's sort of in the crosshairs of this incoming administration, my sense is it's going to be in the form of Facebook. So I don't know if you want to throw the chart up real quick, but
yeah.
Now, the fact that, you know, TikTok is potentially viable once again, or as viable as it ever was. I think, that is, I don't think it's an existential risk by any stretch to Facebook, but it clearly doesn't help. So, Facebook has been doing its own thing. You obviously saw the sell-off on the back of the last earnings release. It's still hanging around, but that's the one I think that probably is in the most jeopardy in this new administration.
Yeah, ironically, though, it's probably the one that is best positioned in this sort of Gen AI race, in my opinion. They haven't overspent on building out these big data centers. They were able to use a lot of that metaverse spend, you know what I mean, to kind of work it into their own business model, serving better ads. So again, this doesn't have the kind of stink of kind of, messing around with the election. Not that they messed around with election, though, that it was kind of manipulated one way or another. I think we'll leave that to Twitter. But this one on evaluation too. So, pretty constructive chart. All right, guys, should we bring him in? Carter Worth.
I love it.
Carter, how are you, pal? Hey, so you heard us just talk a little bit about this move, and I know you've been working on this on Worth charting over the last week or so. This move out of semis into software. I think we talked about it a little last week. You had a note out talking about the SOX, but we want to look at the SMH just because that's the one that has all the volume in the options market, and we're just curious. What are your thoughts here, man?
Well, I mean, just consider the SOX itself is about, what's 30 stocks. Before we look at the SMH, which is the tradable vehicle, the SOX is 30 stocks, about 7.9 trillion. The top three are almost half the way. That, of course, the ones that act well, AI related, who knows? That's NVIDIA, Taiwan Semi, and Avago, Broadcom, otherwise known as. But the issue is how poor the average semiconductor is year to date. So the equal weight Philadelphia Semiconductor Index is on the air, 0, no gains, versus the SOX, which is up roughly 20%. So the story of the SOX is that it's an aggregation that is, yes, holding up, but the constituents don't reflect the performance because of the masking of the three big names. And in fact, the SOX itself, as an aggregation, as a bet, as a wager, as a theme, as an area, has its relative performance to the sector peaked in 2021. And so, yes, this therefore is a stock picker's paradise within semis, winners and losers. But if one is simply made as an institutional manager an overweight to SOX, to semis, it's been a negative output proposition for 4 years. Peaked in beginning of 2021. But anyway, let's look at
let's keep. I was going to say, let's keep moving with your charts because you're going to start to see this with lines and arrows, which is always good.
So it's a standoff. People like to name things. That's a bit kitsch. It's kind of hack. The book writers had to do it in the 40s and 50s. No one believed them, but we're well past that. So you call it cups and handles, heads and shoulders, all this stuff. It represents a moment of equilibrium. In this case, some would say a symmetrical triangle, a pennant. What it represents is a standoff. And now it's soon to be resolved. You can see the arrows. And why does it touch? I'm not in the why business. I have long reports about why, but this is an anathema to the Federal Reserve Bank, the CFA Society, and to the semiconductor analyst who studies book to bill. But why? Why is it stopping right there? This is how it is. Now what? Last chart, that's a judgment. Someone else might say it's a great rendering, except you should have a green arrow because NVIDIA is going to report and the whole thing's going up. Well, that's what makes a market. My judgment is red arrow that we're going to break down, and that's based on how poorly so many individual constituents are acting.
Let's look at before we go to the SMH, and but if we go back real quick, and we can't do this on a static chart, but that uptrend line that you have in place since the summer, Carter, you can almost draw the same line back to the fall, which theoretically should make it a more interesting level of support and subsequently a more important level if it breaks. So let's go to the SMH because this is going to look hauntingly similar, I think.
Sure. Correlation's about 98%. And we can draw the lines again the same way. Different colors just to make a point. Arrows, of course. And then do we or don't we get resolved? Well, we know we'll get resolved. The question is, because if you don't get resolved, you'd have to stop trading, right? You'd have no more action, be frozen. And that doesn't happen. So equilibrium and perfect equilibrium does exist, but it cannot and does not persist. Something comes along to break the standoff. Sellers are in the ascendancy or buyers. Again, my judgment is lower. I suppose NVIDIA's results will have a big part in informing how this is resolved.
100%. I mean, I think this entire thing is predicated and waits on, what NVIDIA says. But quite frankly, the setup into it, Dan, I think is troubling in a word, because if you look around the edges, and, we've talked about the weakness in Qualcomm recently and some of the ancillary names, I mean, it doesn't augur particularly well. So to the extent that people hope this doesn't happen, that hope is all predicated on NVIDIA saying something good and the market reaction in kind next week.
Yeah, and I think what's most important, obviously this thing, there's a bunch of tension as Carter just laid out, but the lack of ability to kind of confirm the new highs in the S&P and the Nasdaq, it makes the point what Carter's saying. And when you talk about 98% correlation to that, the stocks, well, 35% or so of this ETF is NVIDIA and Taiwan Semi. Taiwan Semi, I think, has no shortage of potential headwinds right now, especially with this new administration, with what the existing administration, the news out that the Commerce Department is banning some sale of chips to China. I mean, it goes on and on and on. You have a stock like NVIDIA that's up 200% in the year. It's the largest market cap company in the world now. I think it can only disappoint. Now, I've said that in a couple quarters in a row, but I think the SMH is an interesting setup as an outright bearish bet, or you have a situation where maybe you're hedging some names in your own portfolio. So let's go to my screen here for a second. I want to build a trade. I want to look at a put spread in the SMH. I want to look out to December expiration. Let me just click on this here. So this is obviously a 3-month chart here. You see that 150-day moving average. Doesn't tell me a whole heck of a lot. I can just kind of work off of what Carter had to say here. You see that double top as recent as last week or so. Maybe it doesn't have a lot of authority, as Carter might say, because it's a short period of time. But I want to kind of look for a play. It's trading around 250. I think our prices when we go through it are going to look a little different here. But I want to look down to the 245 strike. What is that? That's right near that uptrend that I drew. It's right near that 150-day moving average. So let's go to the options chain. I'm going to look at December here. This is December 20th expiration with the ETF at 250. I want to look down at the 245 strike. That would cost me about 790 right here. And I want to look to sell one of the 225. So I put that put spread together. It's going to cost a little over $5. So let's call it $5 for right now, right? So I'm buying one of the 245s. I'm selling one of the 225. So it's a $20 wide for about $5. My break even is at 240. I have gains of up to $15 between 240 and 225 with a max gain below it. I have losses up to $5 from 240 to 245 with a max loss above that. So here's what I like about this trade. I'm risking about 2% of the ETF price. It breaks even down about 4%. We know that this can be a big mover, especially in the concentration of a couple of those names. And I just want to say this, okay? All long premium directional trades, whether you're good at using stops or not, try to use a mental stop. I try to use a 50% mental stop. So let's assume that this bearish trade goes sideways over the next few weeks. Let's say it goes up. If that premium that I spent about $5 is looking like 250, I want to cut the trade. The probability of success at that point is not particularly high. So that's kind of how I manage the risk of a trade like that. Guy, thoughts?
Yeah, let's put the screen up that outlines it so people can look at this. And there you go. So buying the 245 put makes 100% sense to me, given what we just talked about. And you're mitigating that cost by selling the 225s, which makes a lot of sense. If you look at a chart, and well, you can look at this chart, but you go back to sort of the September low. The September low was 215. So, I'd be more apt to look at the 215s, but you're probably not getting as much to sell. You're obviously not getting as much to sell the 215. So I like the structure of this trade. And I think in terms of risk reward, it makes a lot of sense. You say it all the time, use a 50% stop, whether it's a mental stop, you put it in yourself. I mean, it's up to the individual, but given what we're up against, given when to the earnings next week of NVIDIA, and this captures that, I like this trade. And, you probably, I can't speak to the percentage that market's going to give you on the winning. You have that up there, but my sense is it's probably about a 35% winning potential for a winning trade here. That's just back of the envelope, Dan.
Yeah, so let's just do this. Let's go back to my options really quickly. So I'm in December expiration, right? And I'm looking at the 245 put, right? And if I just look over here, what the delta is on this. So there's like a 40% probability that those 245s are going to be in the money on December expiration. And so if you look at the 240 strike, Guy, you nailed it. 33% or so. Like that's how you would want to kind of get to your break even one way or another. Because
It's like Rain Man shit right there. That's not bad.
You're Rain Man-esque. All right, Carter, you got to help us with this one. Let's move on to Tesla because the amount of market cap that this stock has gained in a week is astounding. It was 300 billion. This stock was kind of stuck in the mud. You know, they had that the robo-taxi event. The stock got killed. It was down 10% the day after it. And then they had earnings and they had deliveries and it wasn't bad as everyone expected. And the stock started to kind of put a little bit of a floor in there. But the move that we've seen over the last week is pretty astounding. Help us make some sense of this.
Yeah, well, I mean, for starters, just speaking of the street, because this is one of the most liquid, popular, and most traded stocks, you're talking about almost 70 analysts covering this, and only 2 have a price target that's higher than the current price. 2. So the street is, one could say, not particularly bullish. Again, most believing that in the coming 12 months, the stock will be lower than where it is now. Of the some 70 analysts, the average price target is 237. Can you imagine that? And the stock, of course, trading at 325. But the charts are important. And what I would say is that the use of the expression overbought, it implies that one is using an oscillator because that's what it's derived from. And it's an odd expression. What do you mean? You bought too much? Like you had a second dessert, you ate too much? What does that mean? Overbought, made a mistake? Oh my. It's an expression that implies the use of an oscillator, whether it's a MACD or an RSI or Bollinger Band or whatever else. But it is said differently in classic charting. It's just far away from trend, steep and uncorrected. This is a 5-year chart, and you can see how far above the smoothing mechanism it is. And in other instances, when it's been this far above, it is checked back. And so you can annotate it that way. I've got another one. You can annotate it this way. And so just go through all 3 again, you know, far above the 150-day, has already resolved itself, broken out of this formation, but now has come and gone. And then on a very short-term basis over the past year, you're up and out of this well-defined channel. So at a minimum, again, most people don't short, but if you're long, take some money off the table.
I think most people, well, I shouldn't say that. I look at the move recently and say that 90% of the move higher has been on the back of this election. Whether that's true or not, I mean, nobody can figure out, but that's the way I look at this, Dan. And so whether that's created a bit of a short-term bubble remains to be seen. But I'll tell you, in terms of the volume that we've seen, it suggests that any shorts out there have covered, and there are a lot of probably new entries into a stock that's basically, again, it's been up and down over the last few years, but we still haven't gotten back to the prior all-time high. And there's some fundamental reasons to be concerned, regardless of who's in the White House in a couple months. With that said, you set up a trade that if you're long stock, you can at least do something to help you sleep a little bit at night.
Yeah, I mean, listen, once you kind of get into a trade like this, if you were one of the folks who were just buying this pretty well, let's call it at 250, and the stock went straight to 350, or you've owned it for a while, maybe you bought it after the robo-taxi event or after earnings, and you have these sort of short-term gains, you might want to look to, protect those. We're not huge fans of just kind of littering your portfolio with long puts against long stock. That's a great way to drag performance on your portfolio. But let me take over the screen here a little bit, and I'll just show you this. I mean, Carter's charts are obviously pretty epic. This is just a 4 or 5 month chart here. You just see the way it broke out. You see that volume here. And again, I can just push this out, and let me just go. Here's the 1 year breakout of a huge base here. We don't have to look at Carter's because I think the breakout above that downtrend is kind of, a lot of good action there. But I would suspect this thing kind of pulls back a little bit. I think there was a little too much euphoria around Elon Musk and his positioning within this administration and what that might mean for, I don't know, his ability to get regulatory approval for full self-driving and then faster autonomy. And then who knows what sort of influence he has on, Chinese tariffs and the like. I just think there's a lot moving over there. So let's talk about a potential collar. Let's say you're long 100 shares of stock. Okay. I want to look out to December expiration here. And one of the things that's fascinating, so with the stock at 224, so our prices are off here, guys. This is how much this stock has moved. And I could show you that just over the last hour or so, but I'm going to use the prices that we drew up here because I just think it's easy to do here. So when the stock was 333, Okay, you could look up to sell one versus 100 shares of stock of the December 400 calls. You would get about $9.25 for that. And then you could use that $9.25 and buy a 295 put in December expiration. It costs you nothing. That's what we're doing. We're collaring your long stock position. You are allowing for upside to the 400 strike call. Your stock would get called away from there if it's above that on December expiration, and then you would have losses down to 295. Okay, so do the math. That's $38 to the downside, but you're protected below that. So you have $38 a downside. So it's about 10% or so, a little more. And then you have $67 of upside. Well, how can that be, right? How can it be so out of whack there? Because there's so much demand for calls right now. That should be telling you something. It's not 2-to-1, but it's close to that in volatility terms. And so they're basically begging you to sell those calls and buy those puts and create a collar. And so if you get to December expiration and the stock is in between 400 and 295, well, they basically go worthless, both of them, right? And if the stock's higher but below 400, you're going to get gains of the stock. And if the stock, let's say it closes at 305, well, you're going to lose, between 333 and 305, that sort of thing. So I love this trade structure. If you don't want to sell your stock, but you're more concerned with extreme downside than you are extreme upside from these current levels.
Market's inviting you to do exactly what Dan just said. And, the optimist will say, you know what? I don't want to give away my potential upside because this thing is going to go blowing through 400 and get through that prior all-time high. Why would I want to do that? Okay, that's fine. I think the more structured person will say, you know what? I can sleep at night understanding that I do have protection, and it is almost 2-to-1 call to put skew on the upside because of the exuberance around the company. So, if you're long stock, you got to take advantage of it in some way. Now, one way to take advantage of it is to just outright sell the stock and say, you know what, I'm going to take my ball and go home. The other way is to sort of set something like this up where at least you know where your protection is, and you can, again, sleep well at night knowing if there's some sort of tape bomb, you do have protection.
Yeah, one last thing, a lot of folks like to use these structures in around names that have had big gains, just kind of getting through year end, for tax purposes and the like. So there's a lot of different ways you can think about using a collar against long stock. Carter, real quickly on those levels, 400, we kind of targeted at those prior all-time highs going back to late 21, and that kind of 300 level. Maybe we can go back to one of Carter's charts really quickly. I mean, if you were looking to do this sort of trade to collar a big winner, do you like those strikes?
Oh yeah, I mean the 400 is such a stretch, right? And when we're participating so much of the upside back to the former high, you'd be even that much farther above trend, the 150 moving average, and so it makes a lot of sense. In terms of the 300, you're in the midpoint of the channel, which you can see right there, and so that's I would say there's an expression called "that's money good."
Yeah. Hey, one of the things that, we love doing these with Carter is that, like, when we choose strikes, we're not just kind of pulling stuff out of the air, right? Like, we're really helping, to inform those strikes by looking at his technicals. So, again, Carter, we really appreciate you being here. We really appreciate your help as always. We'll see you in a couple days on the market call.
Okay. Bye, guys.
Carter looks good. His hair looks good. We talked about a stock breaking out. Let's take a look at EA. It's in the game. That, of course, EA Sports. And, this is a stock that if you go back and look, and we're going to throw a chart up, I mean, this has been sideways now for quite some time. And finally, Dan, after 6 years, we're getting through those prior highs, which is interesting. Now, this comes on the heels. They reported earnings on October 30th, I believe. But there's probably something else going on here. And one of the things that I think is, for whatever reason, giving some giddy up to the stock, other than that earnings release a couple weeks ago, is the fact that the CEO of EA is being sort of tossed around to potentially be the successor to Bob Iger. I've thought for a long time that EA would be a perfect sort of latch on for one of these. I'm not suggesting that's more likely now, but clearly this is a stock that's in breakout mode.
Well, yeah, and if you think about the deal that Microsoft did for Take-Two, right? This was a couple years ago. I mean, it would make some sense. A $42 billion market cap, maybe that's a difficult one for different companies to swallow there. Who knows? But if you lose the CEO, maybe there's some folks kind of circling the rim here a little bit. But this sort of breakout is fairly epic, to your point. And what did your prom date used to say about like these long bases, guy?
That was Louise Yamada. She would say the longer in outer space or the higher the base, something. I don't even know.
Longer the base, higher in outer space. And I know that
Louise is great. She's probably watching right now.
She's the best.
By the way, I apologize for this. I'm the colorblind collector. I just saw it pop up. So throw this question up, Amanda and or Timmy. Before you let Carter go, can you opine on gold? We let Carter go, but we can opine on gold because the sell-off today, I think, got us right to that uptrend line that Dan has been drawing for quite some time. So gold's been going down, the dollar's been going higher, rates have been going higher. I think part of what's going on is money's coming out of gold. It's finding its way into Bitcoin. We've seen that before. I'll say again, I don't think the gold trade is over by any stretch of imagination, Dan.
Yeah, and again, why were we kind of tracking that uptrend? And if Amanda wants to pull it out to 2 years, I mean, it's there, man. I mean, so like this is the one, and Carter always says this is like, support is not like a defining sort of thing. You can fall through it, you can go through resistance a little bit, but this thing is steep, and it was like relatively uncorrected. You see that consolidation a little earlier in the year. I mean, I don't think it's going to get back there. This is the GLD right here, but if this thing overshoots and it gets down to 230, that was that kind of consolidation from August into September. I mean, to me, it's a bit of a layup. Now, the only problem is if rates are going higher and the dollar's going higher, this might be a little bit of a headwind for the gold. Does that make some sense to you guys?
No, it makes some sense to me, and I think that's what people are looking at for sure. And obviously, crypto has recaptured the imagination of people, which is not helping. But we'll see how long that lives. Again, there's structural reasons for the gold trade to continue to work that have not gone away. If anything, they've gotten worse or better for the gold trade. You, Dan, also have a trade in Google we want to take a look at.
Yeah, this was one from last week. And again, we were trying to find some names that we thought would benefit one way or the other, from whatever the election outcome was. And, there was some kind of talk that maybe like a Trump administration would kind of take their foot off the neck of a Google and maybe not be as aggressive with the remedies from the FTC and some of the stuff that they're kind of potentially thinking about. So the trade last week on November 5th, when the stock was around 170, was buying a 170, 185 call spread in December. It cost about $5. Right now, with the stock around 180, the December 170, 185 call spread can be sold at about $9. And when I think about that sort of profit in a short period of time, normally if I had like a double, I might look to take half of the position off and let the other half ride. But considering where we are right now, after such a sharp short-term move, I think I'd take the profit and move on right here. Because when I think about this, it's like, okay, we had that initial shock. We got right back up to that level that was post earnings that gave it up. And I think that that's probably some reasonable, resistance there, guys. So again, would I look to reload down there near 170 at that 150 day? Sure. But I like taking trades when I have a nice profit and kind of reevaluating.
Yeah, I mean, 80% in a short period of time is nothing to sneeze at. To your point, when you have a double, if you take off half, you're in the rest for free. I mean, that's one way to look at it. So there are a lot of things to do here, but I think your point is well taken. And it's a short period of time when you have those kind of gains, given some of the uncertainty we talked about, this is probably the right thing to do, Dan, without question.
Yeah, no doubt. I mean, the last thing I just say is like, listen, this is going to be a volatile period. Over the next 2 months, we're going to have different folks who are going to be, who's going to be out, who's going to be in, what do they look like, what is their past history, how do they look at, regulatory stuff, how do they look at big tech, how do they look at, the banking sector. I mean, it's going to go on. And I think that we have a little bit of a game plan or a playbook from the last Trump administration. I mean, there's going to be a lot of chaos. And I think one of the things, just in general, I think that's fair to say, Guy. Would you say it's not a political comment, but I think this is how the administration went last time. And so, I think you probably don't want to get too married to any one position, on a secular basis or a sector basis. Does that make some sense to you?
No, I mean, you got to read the tea, in trying to read the tea leaves, is this person going to be more hawkish towards China? And we're obviously talking about Marco Rubio and, what is this new potential administration cabinet members look like and what are their stances and potential for a new Fed chair, although I don't think that's going to happen. I think Jerome Powell is in there. Treasury is something else. So, we'll see how the whole thing shakes out, but your point is well taken. A couple things before we go on the question front. Ramesh is asking, can the team opine on Newmont mining? Well, throw up a Newmont chart. I thought it would hold 45. That didn't happen. I think as we're sitting here right now, the stock is either side of about 41 or so. It has not traded particularly well since October, the middle of October. I think the stock has gone now from 57 down to 41. That's a pretty dramatic move in a very short period of time. Again, on the back of gold selling off and Newmont Mining's earnings, which did not captivate people. I still think gold's in play, as I said. Newmont is a name we talk about. The name that I've talked about for a while is Agnico Eagle Mines, which is traded much differently. That too is recently sold off. I think it's trading about 76.5 now. But you got to pick your gold miners carefully. I think Newmont right now, given the magnitude of the sell-off, is more interesting than AEM. But I guess my point is, I thought it would hold 75. It did not, Dan. Excuse me, 45. It did not.
Yeah, I mean, at this point, it probably makes more sense to look at the commodity, the underlying, right? And unless you can make some strong case about the way this company is operating or where they said. I mean, again, I don't know jack about these names, but I'd probably be more inclined to buy gold because the way you're thinking about it from a macro standpoint. But maybe this one looks really cheap, or there's something going on. Maybe there's some big sellers out there or something. I don't know, but I get it. I just think that reaction to that earnings move, that's something you got to pay attention to.
Yeah, 100%. T-Bug is asking about Viking Therapeutics. He wants to ask Carter to chart it. What I'll tell you, T-Bug, is it's not something you chart. This is basically a name you're buying because you think they're going to get bought by somebody. And this stock was recently, I think, if you pull up a Viking chart, I think it got up to like 79 or so, and it's obviously sold off as well. We talk about it all the time. This is an extraordinarily volatile name. I do think it's going to be bought. I think it's going to be a double now from where it's currently trading. So you take it with a grain of salt. I mean, we'll see how it plays out. But, Viking, I think, would make a perfect tuck-in for some of these big cap names that have not gotten themselves into the GLP-1 space. So you tell me who it is, whether it's Pfizer, Merck, or somebody like that. I think Viking by middle of next year is going to be acquired by somebody. And I've been saying that for a while.
You have. Let's do this really quickly, Amanda. Let's share my screen again here, because I think this one is kind of interesting. If we pull up the Viking here, or Amanda, why don't you do it actually while you're here, because I think this one. Let's go to the options chain on the Viking here, because and let's just go. I just want to show you guys a little something. Let's go to January expiration, if you will. And let's look at the at the money straddle here. So you have a stock that's trading, ish. Let's go to the at the money here. And so let's just look at the call premium plus the put premium. Let's just go to that 60 strike, if you will. So it's 750 plus $8. That's 15.5. Do 15.5 by 60, right? You can do the math there. That's a quarter of the width of the stock price. So what is that telling me? That's telling me that a lot of folks agree, and what Guy thinks is that this is a takeover stock that's in play. So this is one that'd be really hard to play through options. If you were to buy, let's say, that 7.5, or you're going to buy that 60 call at $7.5, your break even's up there at 67.5. Now, obviously, that's up, almost $10 from here. And it's a tough way to make money, because you're basically trying to play for an event that you have no idea when it's going to come. And so, if this thing doesn't go anywhere or goes lower, you're just going to have lots of decay on that. I just wanted to highlight that in the options market.
Well, the options market is telling you exactly what Dan just said, that, they're pricing in something. So to play it through options, you really got to thread the needle. I mean, the way to play it is through the underlying stock and understand that it's volatile, but you also understand that it's not binary in that it's going to zero, but, it's binary in so much that, you have a tremendous amount of upside, and the downside, I think, I mean, this is a stock that could probably trade back down to 45 and nothing's changed other than the price of the stock. So again, I'll say it again. I'm going to stand by it. If I'm wrong, you know me, I'll be the first to say it, but I think this is a name that's on somebody's radar screen. It's just a matter of time before it happens, Dan.
All right, man. We covered a lot of ground here. We did.
I got it. As you can tell, I'm knotted up, so I got to head in for the big fast money show.
Well, go get them, buddy.
Because Robin, I tell you, the Robinhood platform is fantastic. I mean, I think you're enjoying it. I know Amanda is. So it's been fun sort of navigating it, and hopefully the folks watching enjoying it as well. Visually, I hope it helps people. We're trying to make things a little bit bigger so people can see it, Dan.
Yeah, I like the fact you can just trade right off the charts. If you want to trade off the charts, it's really easy to build those option tickets too. So, and then the charting is really great, as we just discussed. It just kind of helps inform the strikes that we're looking at in some of the outright calls or puts, or what are doing a spread. I think they're really helpful for spreads too. It gives you a sense of where you want to sell, that put or sell that upside call. So, we appreciate it. All right, Guy, get yourself into the city, man.
Well, I want to thank the audience as always. Thank you for the questions. Thanks, Doug Cass, for his participation as always as well. Tomorrow we're back with EYT at 1 o'clock. That, of course, Elizabeth Young Thomas. Go to our YouTube page, Risk Reversal Media. If you have not already, please subscribe. And Market Matrix continues to just sort of do its thing, Dan.
Yeah, it does. All right, everyone. We'll see you tomorrow. Thanks.